one of those analysts, Gabriel Dechaine, joining us from National Bank. Gabriel, it's your job to try and figure this out, put it into your models and understand what it could mean. How significant were the recent reports surrounding what exactly TD is dealing with to your understanding of what the issues had been?
Oh, you knew that there was something significant because when it's labeled an AML issue, there's always a criminal, the people laundering the money, the criminals are involved. So, nonetheless, when we discovered what was being alleged, the Chinese fentanyl gangs and stuff like that, that really, caused me to take a step back and reevaluate the situation. And in doing so, not only looking at the penalties, because the penalties are important, and the previous speaker said 2 billion, maybe more. That's our number. I'm really looking at historical precedents and trying to think of a big enough number that makes sense, but it could be anything really. The other element to the situation, or the risks to TD, involve what the regulators, non-monetary penalties or restrictions that they place on TD. Those are something that could still come into play. That could be, a persistent push to keep investing into compliance costs or compliance personnel and systems. And TD's said the next 2 years they're going to spend around $500 million a year after tax. That could go on, the numbers could get bigger, or it could last several more years beyond that. And then there's stuff that, a little bit more straightforward, I guess, in a way, is the regulators can tell the bank that, until your problems are fixed and we're satisfied with your new systems, there's a cap on your growth.
To put that in perspective for TD, I mean, they've got the highest capital levels around. So I imagine there's no concern that they could withstand that. But what about, the other levers that they could pull to kind of offset, maybe that increased expense? We are talking about a bank that's got a huge presence in the U.S., recently bulked up in investment banking. Is the fear that they're not able to pull those other levers?
So you're talking about TD pulling levers, and if that's the case, then when we use the term pulling levers in a normal situation, it's because of a bank having or banks having revenue growth challenges because the economy is not doing so great, and the lever we go to is the expense line. Say, they can cut costs. And in this situation, since one of the penalties, if you will, is higher compliance costs, that's not a lever that they can pull. And in fact, the bank announced a restructuring charge. I forget the size in Q4 of last year. And normally when you hear a bank announce a restructuring charge of a few $100 million, the next thing out of their mouth is, that's supposed to save us X million dollars per annum, in perpetuity. In this case, we took the restructuring charge, and no real cost improvement is coming out of it, sort of, because of the higher compliance costs that they're required to incur over the next year or two.
Just to play devil's advocate a little bit, stocks are rarely this cheap for no reason. So there, of course, is a serious reason that's taken TD down to these levels, but you've rarely been able to buy it when it's this cheap or sports a dividend yield this attractive. What do you say to investors who are trying to make that kind of calculus? Because in some ways, and you mentioned this in your notes, that this is not without historical precedent. Other banks have found themselves in similar situations.
Yeah, the valuation argument was being made for TD over the past month or two, and TD's stock price, as price to earnings multiple, had gotten to unprecedented levels, discounts versus its normal premium. And my response to that at the time is, well, valuation alone isn't a reason to buy a stock. You have to think, what's the cause for the valuation to be that low? And in this case, it's such a murky situation with a lot of uncertainty attached to it, and with a lot of long-term implications as well. I mean, that to me seemed a little bit too simplistic to focus on the valuation alone. And as it happens, it would have been, it wasn't the right move to focus on valuation. And just because it's even cheaper now, what would I say to somebody? Well, wait and see. Don't be early to the party, because these things could have a few more negative news announcements. Mind you, I think we're probably closer to a bottom here, valuation-wise. But a stock can stay cheap for a long time, and I think that's the most likely scenario here.
Does this increase the impetus for a leadership change?
Well, that's a sensitive topic, and all I'll say about it is that there were succession questions prior to last week. They've only intensified, I would suggest, in the discussions I've been having with investors.